Onto your markets news now. Asian markets declined following the lead of the United States stocks in the previous section. A combination of declines in major tech firm Nvidia as well as continued concerns about the Chinese economy continued to weigh on sentiment. The Nikkei share average plunged by 4.24%. The Hang Seng Index closed 1.1% in the red, while the Shanghai Composite Index fell by 0.67%. Over in the United States, stocks took a beating last night. This as market players returned from the Labor Day holiday. The biggest loser on the day being the Nasdaq. Economic data, including weak factory activity in August, reignited concerns about the strength of the U.S. economy. The Dow Jones Industrial ended the session down 1.51%. The S&P 500 declined by 2.12%, while the tech-heavy Nasdaq plunged by 3.26%. The JSE is weaker. The all-share index has lost 0.5% at 81,703. The Industrial 25 index has declined by 0.6% and financials are flat. Top 10 resources index has dropped by 0.8% and the precious metals and mining index is down by 1.1%. The rand is trading at 17 rand 91 cents to the dollar, 23 rand 53 to the British pound, and 1984 vis-a-vis the euro. The euro is trading at $1.10 and the dollar is at 144 yen 94. Looking at commodities, gold is trading at $2,491 and platinum trading at $906 per ounce, while the price of Brent crude oil is at $73.34 a barrel. Well, I'm joined by Devin Scooter. He's the head of investments at the Robert Group. Thank you very much, sir, for joining us. So global market players appear to have moved from cautious trading to fear. Why are we seeing these sudden sell-offs now?
Hi, Nombo. Yes, definitely some caution in the market at the very least. And I think this is really all still about rates, right? We had that soft manufacturing print that you spoke about yesterday in the US. That actually showed a contraction instead of an increase. And now we're starting to have concerns as investors on, is that US landing going to be harder than maybe expected? So all eyes to the Fed in a couple of weeks' time. And that's really going to dictate how supportive they could potentially be for an economy that really does look like it's slowing down.
Does this then agitate for the Fed to cut rates by 50 basis points as opposed to 25?
Yeah, look, there's an increasing probability of that since we had that soft manufacturing print. I think the Fed's going to trade very cautiously because if they do go 50, I think it's going to be a big deviation from the path that they've already laid out for us. And I think it could almost stoke the fears of some panic. So markets are pricing in 100 basis points for the rest of the year. We only have 3 meetings. So, doing the maths, there could be a 50 bip cut. But my sense is they're going to go steady at 25 unless something really does break. And I don't think we're quite there yet.
Yeah. So the local currency was flirting with 18 rand against the US dollar yesterday. It has strengthened somewhat, but it's still very weak. Do you see the factors driving the rand as all pretty much outside, exogenous, or are there some local factors at play as well?
No, I think mostly exogenous. I think there are some small internal factors. I think the GDP print was maybe less than what the market had expected. With this kind of reverse in sentiment that we're seeing, less load shedding. But I think what you're seeing primarily is a flight to safety to the greenback. The dollar was stronger against all the majors as well as emerging market currencies. So I think that probably ascribes most of it, but I will say the rand's been pretty stable and 18, and at this stage we'll take it.
Yeah, we're going to get straight into company news now, given time constraints. Woolworths, they reported for the 53 weeks ended June 2024, they reported turnover and concession sales down 10.7% at 76.4 billion rand and headline earnings per share down nearly 30%. What's your reading of what's happening behind the numbers there at Woolies?
Sure. I mean, I think overall they'd be disappointed with those results. I think food continues to be the standout performer. They grew turnover 9% there, which is terrific. But fashion, beauty, and home care really continue to drag that contracted, and they're having a tough old time in Australia, even with David Jones kind of not being in the picture anymore. You saw that in the country road numbers. So I think overall, missing expectations, quite disappointing. They're still struggling with food, general price inflation. That's at almost 8%. So they really got a tough old time ahead. I think maybe two bright spots is hopefully we're going to see the Absolute Pets acquisition starting to be earnings accretive, and their delivery service Dash showed really good growth. That was up over 70%. But off a much, much smaller base than its big rival 60/60.
Yeah. And then Cashbuild was also out with their annual results again for the end of June 2024. They reported revenue up 5% at 11.2 billion rand, while headline earnings per share were down 22%. What does that say about what's happening in the DIY space?
Look, it's been a tough old time. You cast your mind back to COVID and that DIY boom, and Cashbuild was front and center recipient of that. And since then, it's really been tough going. My sense is that the worst actually could be behind them, though. We're starting to see this improved sentiment come through in the local economy. We're also starting to see less spending on solar, which detracted from that DIY theme. And hopefully we'll get lower rates here as well in South Africa. So I think a combination of all of those could paint a brighter outlook for Cashbuild, but we're not seeing it in these results. And I think it's going to, based on this, it's been challenging for them.
Yeah, that was a good play on words. Paint. Thank you so much. Devin Scooter, he's the head of investments at the Robert Group. We're going to go for a quick break.